Hello, my name is Oded Choval, and I would like to thank you for purchasing our DVD kit, the Raziel DVD kit. You are just about to discover an amazing behavior of the Forex market. This behavior is definitely applied also to indicates and to the share market. Without any doubts, you can use this technique to work and trade any kind of market. At first, I would like to share with you the fact that I'm using for technical analysis the chart station of the company name NetDania. It's a free software. You can access NetDania by going to their website www.netdania.com. I don't have a native English, but I promise you that I will try to be as clear as possible about the way the Raziel is working. Once you go to netdania.com, you can access this chart station and you have all the assets here. You can analyze also, of course, the crude oil, silver, gold, and you have many other pairs here in this section. This instrument, more instrument, and you can access any kind of pair you would like to access, including shares and indicates. When I analyze my trade, I always use as a basic the daily and the weekly chart. Only daily and weekly chart. The Raziel work perfectly on all time scale. However, I do prefer to use the daily and weekly chart. You will always find Raziel trades on the daily and weekly chart. Important notice, most of the time you will find the Raziel ready to go. Just few hours, 1 or 2 hours after the US session is begin, or after the UK session is end, or early morning. Early morning is just before the UK session is starting. But you can work with Raziel 24 hours a day. It's much more convenient to try and locate this specific and unique point to enter a trade when the market is relatively calm and not during the combination of the UK and American session. Just let it calm down a little bit and then try to locate your special point. When you start, all you need to do is to take out all your Fibonacci levels. If you are a professional trader, experienced trader, even if you are a novice trader, I'm sure that you are familiar with Fibonacci levels. Most of the world, most of traders are familiar with Fibonacci levels, and yet most of them are losing money. I would like you to go to Setting, Chart, Lines and Object, Fibonacci Retracement, and in the percentage section, take out all the standard Fibonacci levels. Normally, this will be the default setting that you will get. Take it out. Click 3 times Add. Leave 1 0. Add 100 just as a reference. The 0 and the 100 is a reference for me for the point that I draw my lines. And I'm adding another level, a unique level named 72. I go to Style, Show Percentage, Show Value. Next step, go to Fibonacci extension levels and do the same work. Take out all your Fibonacci levels and add 72, 0 and 100. You are done. Style, show percentage, show value. Apply. Okay. That's it. Although you can see some technical tools here, at the moment you need to ignore them. At first you need to understand the way this market moves and the way to draw your lines. This is the critical point of understanding the Raziel, how to draw your lines. You will see amazing behavior here in the market, and this behavior belong a little bit to the Elliott wave theorist, although you don't need to be familiar with this theorist. You see the move of the dollar Canadian here. You need to ask yourself, what is this move relative to moves before? The move before must be higher if you are looking for shorts. It must be lower if you are looking for long trade. This point, the higher point, is here, and it's here. This move is more related to this move. So for me, at the moment, it's not relevant if I would like to analyze this particular point. If you go and draw a line from this point where all this down direction begins directly to this point, you will see that the market move touch in a precise of a pips this point and change direction immediately. You have a trade with only 10 pips stop loss, 10 pips above the 72 level. You need to know how to manage this trade, and we will talk about it. We will discuss it later on this DVD. When you start to analyze your trade, you need to ask yourself a question. Why the price arrived exactly to this point? There is no other techniques in the market that can allow you to enter a trade in almost 0 pip stop loss, like this one. This direction is relative to this one. So all I have to do when I analyze the market is just to draw a Fibonacci level here from this point to this one. See how the market touched the point and changed direction. You need to find this point as early as possible in order to enter a trade with amazingly short stop loss. No risk at all. I can give you, by the way, on this particular chart another example. See this direction. It's relative to this one. All you have to ask yourself, why it went directly to this point? Why this particular point? Relative to the previous move. This was the previous move. It touched the 72 point in an amazing way. You need to recognize it to check that it respects this point and enter your trade immediately with a very short stop loss. We will discuss later on this DVD about your target, about the profit target. Normally we speak about hundreds of pips in terms of targets, profit targets. Let's take another example from this particular chart. You check sometime during the day this move and you ask yourself, what is this move relative to the move before? We had up, we had down, we had up, we had down, we had up, we had down. So always you need to ask yourself why a price reached a specific point compared to a previous point, to a previous move. The price touch in a precise of a pips this particular level and change direction. This was the last profit target and this was the first one. And I will show you how to determine your targets. But you need to operate immediately once you see a price respect this amazing point that no one in the world familiar with. There are many resources that I found in the Bible, in the history, in science, that give a very high importance to this particular level, this particular number. And that's why I have decided to place this particular number on my chart, and I found an amazing behavior of the market. During the end of the session, the US session, I see the price here. I am asking myself all the time, what is this price, this move, relative to this move? It touched the 72 levels and changed direction. During the crisis in the Middle East, oil price went up sharply. One morning, Monday morning. The morning mean GMT plus 2, just before the UK session opens. You see the price of the oil here, and you ask yourself, what is this price relative to previous move? It touched exactly the 72 level and changed direction. You have here only this bar, 1200 pips. Few days ago, just about the American session to be end, I checked the oil price again. This move relative to the previous move. Check the 72. Respect the 72. Move a little bit, touch it and go a little bit back. You enter the trade immediately. More than 1000 pips profit. You can check it here. Down, up. $72. Touch few hundreds of pips. I can show you this amazing behavior repeat all the time, and it's belong in some way to the Elliott wave theorist. However, there is no mention in none of the books in Elliott waves to this level. They speak about the Fibonacci levels, they mention the Fibonacci levels, the behavior of the waves relative to Fibonacci levels, but no one give you the time to enter the trades, the timing, and of course no one can provide you such an excellent opportunities with such a short stop loss. So this is the first step, knowing how to draw your lines. I would like to provide you with some more example to make sure that drawing the lines is clear just before we will go to managing the trade. Okay, I would like to continue and share with you some other examples just to make sure you understand how to draw your lines. Check the dollar index. The dollar index can provide you some indication about the dollar status in the world, the dollar situation, whether it's going to be strong or weak. If dollar index goes down, the dollar will be weak. Means euro dollar, Aussie dollar, Kiwi dollar, British dollar will go up. Dollar against the Swiss franc will go down. You want to check at the beginning of the day why the price arrived to this level, or maybe just after the US open session, just the US session opens, sorry. What is this point relative to this one? You check that the price respect the Raziel point. Touch it, respect it, and go back just a little bit. Respect it means the dollar is about to get weaker. You know exactly what kind of trade to look for. You know that you cannot go euro dollar short, British dollar short, Aussie against the dollar short or Kiwi against the dollar short, because the dollar is just about to get weaker. Excellent indication. You can check this point after a few days here, relative to this move. Again, Raziel, the dollar is just about to get weaker again. We will discuss these two lines, these two, what I name as our banda, a place that the price stop, and maybe I want to execute some profit, maybe I want to leverage my trades a little bit more to open some more trades. But first, learn how to find your point. If I go to the weekly chart and you find the price here, and you would like to try and understand why the price reach this particular point, it can be relative to two moves, either this move or this move. You need to check both of them. You see that the price respect the 72 levels, the Raziel. Give you a clear indication that the dollar just about to get stronger, and the euro dollar, Aussie dollar, British dollar, Kiwi dollar against the dollar, of course, will go down. Dollar franc, for example, dollar against the Swiss franc will go up. This is again another nice example about the dollar index. See how the market moves very fast to this direction, relative to the previous move down. It touched the 72, respect it, and go down. You need to learn how to manage this trade, not to be afraid of these moves. Exactly like I show you in the first section, the 72 level here. Let it work. See that I could draw my lines from this point or from this one. But first you go to the first move relative to this move. We had a move down, correction, and then down. So this was the last move down. British yen. The British against the Japanese yen. Check this very fast move to this direction. Check this daily bar. You want to understand the price here. Why it reached exactly to this point relative to the previous move. Exactly 72. Touch it, respect it, you enter an immediate trade with a very short stop loss. A very short stop loss. Once it respects it, it will tell you also your profit target. Sometimes you get a very large move, what's so-called wave number 3, and sometimes you get a correction move, what's so-called wave number C. You check the charts and you see the price reach this point. You had an up, down. You want to understand this point. You draw your lines. It reached and respect exactly the 72 level. Enter the trade. Enter the trade. You need to learn how to manage it. You have a 400, 500 pips move here. The price come to this point now. What is this price relative to previous move? We had a down move, up, down, move. This was the last move down before this move up. So I first draw the lines from here. It touched the Raziel level again and went down a few hundred pips. If I go to the weekly chart, in order to determine the price here, it's easiest to go to the weekly chart. See the British against the Japanese flying up to this direction. It's flying until it touches the Raziel point relative to the previous move. He respect it. He went down 300 pips. He go back, check this point and start the move down 700 pips. And then he go up 272 again and another move. You don't need any tools, any robots, any indicators in order to determine to enter a trade. You just need a common sense in order to find your trades, and you need to know how to draw your lines and how to manage your trades. Okay, I would like to keep on with some more example to make sure it's very clear how to draw the lines and how to find this particular and amazing Raziel point. I would like to continue and make sure that drawing the lines is absolutely understood. During the end of the American session, we found the price here. The question you need to ask yourself, why the price reached this particular point relative to previous move, counter move. I need to draw my lines from this point down to this point. What I see that the price touched the Raziel point, respected and went down. Very short stop loss. Common behavior. Many times it touch the points, go down, give you first trade, first chunk that cover your stop loss, and we will discuss about managing the trade later on this DVD. Going back to check the level and then give you the move. And this is what we called 1, 2. The first profit target was here by Fibonacci extensions, and I will show you exactly how to work with it later on. Monday morning, the market is open. You ask yourself, what is this price here? Why the price reached this particular point relative to previous move? It must be a counter move, of course. I draw my lines. It touched exactly the 72 levels, the Raziel. Respect it. It touched the point, retreat a little bit, you enter your trade with two trades, two chunks. One chunk with a very small take profit in order to protect your stop loss. Once the first chunk is closed with profit, let your profit run to the other for the other chunk. You will be able to find and recognize this point many times, even in a lower time scales. See a move relative to this move, touch the Raziel point, and went down. 1, 2, 3. I do prefer to work only on a daily and weekly basis, but sometimes I can use the Raziel in order to time a trade, to find the right timing to enter a trade with a short stop loss in a lower time scales. Let's take another example. Aussie yen move sharply to this direction, counter direction. What is this point relative to this point? Once you reach, touch, respect, retreat few pips from this point, you can enter your trade. Sometimes you enter the trade, you manage the trade. You went down a few hundred pips and then go back up. Always check why it came back to this point relative to the previous move, and it touch and respect the 72 levels again. Let's stay here. I'd like to give you another example. See the price move sharply to this direction, relative to this direction. See it normally, either at the end of the American session or the beginning of the European session. Early morning GMT plus 2. Mean if the about 1 or 2 hours before opening the UK session. It touched the 72 and go down. This level can determine your profit targets. It lets you know that your first profit target is here. However, you need to manage your trade in order to prevent such move against you. And then we will learn to use this special banda, special two lines, in order to execute profits, to allow the move to correct back to 72 in case it will be 72, and then to join the trend again, to join the move in order to reach our profit target. It's very important to me to provide you with as much example as possible. You found the price here, you find the price here, and you need to ask yourself, what is this price? What is this price relative to previous moves, higher moves? It can be from here, it can be from here, it can be from here, or from here. You need to draw your lines. Higher priority to the closest price, closest move, higher, in higher point than this point. Or you can move to here. You reach the 72, touch it, respect it, retreat, and give you amazing move back, down. Now, it did not, this move did not arrive yet to the profit target. And I will show you exactly how to determine your profit target. Check a move here, Canadian, move up, 1, 2. You want the 2 to touch the 72, and then you enter the trade immediately. Now many times what you will see is 72, a move, back to 72, a move, back to 72, a move, and so on. This is the level you would like to check. Let's go back to another example. You see this point, early morning, before the UK session open. You ask yourself, what is this point relative to the counter move before? You draw your lines. Touch the 72. Respect the 72. Enter the trade immediately. Place a short stop loss. 10 pips plus your spread for shorts. For long positions, just 10 pips. That's it. That's it. You don't need more. In case you will lose only 10 pips. If this trade will work fine, you will make a lot of pips. Sometimes it can happen that you get the first chunk and you lose the second chance. You end up with break-even trade, which is fine. But again, we will learn how to manage the trade. A noon time, just before the American session is just about to open, many economic information just about to get out to the market. For example, a rebate announcement in the UK and Europe. You see this point. You have nothing to be afraid. This point retrace exactly 72 relative to the previous move. Enter the trade with 10 pips stop loss plus spread. After the announcement, this is the move you get. in this particular case. Friday morning, just before the UK session is open, you check this price here relative to previous move.